What's up, guys? I had a solid trading day yesterday, both capturing the move down on ES with my plan playing out to perfection, and then I also caught a couple longs towards the end of the day yesterday. So I wanted to hop on, make a trade review, see if you guys like this type of content from over here at Risk Life News. But first things first, I want to talk about, if you're new to the page, if you've been here a little while, you probably know this already. If you're new to the page, I learned to trade from the Rake Trades Mastermind program. I was lucky enough to take his Mastermind 1.0 program. I thought it was a great experience. I thought it was the only course that I'll ever need to take is the way I feel about it. I was super lucky that the first trading strategy that I learned, I think will be the trading strategy that I stick with forever. And basically we trade using trends, candles, and levels. And then the one other thing is multi time frames, how the different time frames affect each other. What I want to show you guys, what's awesome with Jake's Mastermind, is even after you're done 18 months later, you still get access to all these bonus lessons. Jake continues to add bonus lessons in here from other mastermind classes, just different trade reviews he does. He's done a handful of these bar by bar breakdowns, and those are just unbelievably valuable. Like you can see here, he literally goes through every candle on a 5-minute chart and explains to you, what he was seeing, what that candle did, what it means, what to expect, what you could expect next. And those lessons are just unbelievably valuable. But the one thing that he stresses a lot, and you get the lessons from all of the masterminds when you do his mastermind, is his multi-time frame analysis lessons. And so I've obviously been diving into a few of these. Has a bunch of different chart examples. So what I want to do today is basically do this trade review and break down what I was looking at, why, starting from the weekly chart and kind of working our way down to the smaller time frames. So if we take a look at the weekly chart here, in my opinion, the weekly chart is definitely still in a uptrend on ES. If you are newer to trading, you don't know how to identify an uptrend or a downtrend. An uptrend is basically just a series of higher lows and higher highs. So I marked those out here. You can see the market's in a downtrend here. We've made a high, we come down and make a low. We start making lower highs and lower lows, lower high and lower lows. And then here things start to we make a higher high, then we make a lower low, then we make a lower high. But here is where the trend on the weekly chart starts to flip. We come down here and we make a higher low in this section, this area here, and then we get a push up to a new higher high, essentially starting to flip us into an uptrend. We come down here and make another higher low because we are higher than this low here. So we make a higher low, push up for another higher high here because we are higher than this high. Little pullback here, which you could call another higher low, to then this big push up here for this higher high. Now, I personally would not call these higher lows because they are just inside bars. They never break below the previous candle's low. So I don't necessarily consider those to be a pullback. That's just more of a pause bar, inside bar to me. And then we start to get this pull back here and make this higher low here. And we start to push back up. Now, to continue the uptrend on the ES weekly chart, we would like to see it continue up and reach new highs above these highs here. Now, our first clue that things may be looking bearish is that the ES weekly chart was starting to show signs of a failure to go higher. We got this push higher here, put in another inside bar, got a test above this candle's high, which then failed and gave us a close back below. And then this week we have opened and we have broken below that candle's low, setting up here what we would consider to be a potential lower high. Now, if this lower high gets continuation down through these lows, we have now flipped the weekly chart into a downtrend. So looking at that, that gave us our first clue that things were potentially had options to be a little bit bearish. If you then flip to the daily chart on ES, we, kind of made this move higher here, consolidated with a pretty nasty daily range, and then we started to break out with a new high, a higher low, a new high. So we have been trending with higher highs and higher lows, higher highs, higher lows recently, and now we have gotten this kind of big kind of daily sell-off, and we have now made new lows below this low, and we have now made a lower high here from, so technically you could say, you got a lower high here, pull down, you got a lower high here, you got a lower low here, below this low, below these lows, and now we got another lower high here. So then we've kind of double bottomed here and made a new high. And so the ES chart, daily chart, is kind of in a tough spot. Like it has started to flip into a downtrend. But then as soon as we started to flip into a downtrend, we've kind of breaking up back into a little bit of an uptrend. You could call this a higher high, a higher low, higher high, a higher low, higher high. And this is actually making a lower low. So that's the other. The daily chart is also kind of, technically speaking, I think you could argue that it's still in an uptrend, but it's showing signs of starting to flip that uptrend, in my opinion. Also, one of the patterns, something that's called the 3-bar play or the 1-2-3 pattern, and that is when you get a big trend bar, like we have this big downtrend bar here, followed by kind of a smaller pause bar, preferably an inside bar. This one did get a little bit of a test lower, but this is kind of almost an inside bar, but a small pause bar towards the lows. So a 3-bar play, we would be looking for a break lower on that candle here, which we did start to get and play out, but that got bought back up yesterday. We have FOMC, so we have some data. So interested to see. I really think the FOMC data is what's going to dictate what happens on the ES daily chart in terms of, do we continue this downtrend and flip the weekly chart into a downtrend, or do we get a pump and start to flip this back into an uptrend? So anyway, the weekly and the daily charts were both giving us signs of potentially flipping their trends to downtrends. And then if you come in on a 5-minute chart on ES, let me pull up my levels. If you saw my Instagram stories yesterday, you would have saw that yesterday morning, I posted my game plan. And while ES was getting a little bit of a gap up here, I posted that my game plan was over this 45.11 level here. If we could develop a trend above that, I would be looking for longs, targeting these upper levels here. Under this level here at 44.94, I would be looking for shorts, targeting these lower levels here at the 44.70, 44.65 area. The market obviously was getting a gap up. We started to flip into a 5-minute downtrend and sell off pretty harshly, and we opened underneath the level that I was watching. That's the other thing about the Rake Trades Mastermind. These levels are unreal. I mean, that and the market moves level to level. I mean, look at this move. We got the rejection of the level, and we got the perfect move down to the level where it then sees some support, but eventually gets the breakdown to test the lower level, where we then hold and rally all the way back up to where the level, to where we reject, come back up, and then go test it one more time. Also, you guys should be using the opening print as a level, best free level in the market. But anyway, so on my stories, I had put that I was looking for shorts targeting these levels as the market opened and we started to get this push down here. I actually posted that I would prefer us to get bought back up and rally and test the level from underneath and then fail before I enter my shorts, which is exactly what I did. As we got this failure here, I took my first entry on a 2-minute sell rejection of the level somewhere in here. And then when we got the 5-minute breakdown, I added to my short. So I had a pretty decent size on with a stop above here. Essentially my original entry, I was risking 5 points. to essentially make 20 to 25 points. So a 4 to 5 risk to reward, risking 1 to make 4 or 5. So very happy with the risk to reward, very happy with the fact that multiple time frames were lining up with the intraday downtrend that was happening, with the higher time frames giving us clues that they could be starting to flip. So I executed nicely on the entry of this trade. Now here's where things went a little bit wrong for me. The other resource that I learned from that I really, really love is Tom Hougaard's book, Best Loser Wins. And he talks about adding to his winners to actively to fight what your brain naturally wants to do, which is trim your position, reduce your risk. He talks about liking to ride out the moves with full size, even adding to those positions, ensuring that your winners are bigger than your losers. You wanna be big when you're right. You wanna be small when you're wrong. And why not add when the market is currently agreeing with you is sort of the philosophy, right? Especially for me, learning Jake's system. Jake doesn't necessarily do this. He takes obviously a much bigger position size and he scales out of his position. But what I've seen work with Jake's system so many times is these level to level moves. And I trust that like when we start to trend below or above a level, that we will most likely trend to that next level. So there's really no reason to start to scale out and ride that with a smaller position size. And why not, if the market's agreeing with you, add to that position and win even bigger when you trust the market to make a level to level move, right? So my plan was to actually, as if this started to work like it did, was to add to it on potential lower highs. So had I followed my plan to perfection, is what it would have looked like. I would have entered short here. I would have added to it on this 5 minute. I would have rode it down. I would have held full through this 5 minute pullback. I would have added to my short on the break below this pullback. I would have exited at least half, probably 3/4 of my position down on this level test here. I would have held the rest down to this level test here, and I would have exited full here. And that was my morning game plan to do that. The charts played out perfectly for that game plan. Where I dropped the ball was I was on my Instagram stories trying to act like a, fucking big shot because I called the trade, whatever, right? And went to take a trim because while I'm on my stories, we were getting this nice push down, and I went to take a trim and I exited full of my position here. Which turned out to be a pretty nice winner. It was like a $400 winner, but obviously could have been, I could have captured probably another 10 points, and I had, I think probably 6 or 8 contracts. So anyway, not the point. But the problem is, after making that execution error mistake, it then caused me to make some poor decisions where I then tried a counter trend stab. When this was making new lows, ES was making new lows, but NQ was not. I think YM and RTY were both holding levels at the time. So I was basically trying a counter trend stab that also with FOMC, that we weren't going to just get a harsh sell off all day, that we were going to get a range day and we were going to rally back up towards these upper levels. In retrospect, that was way too early of an entry, and it went against my morning plan because my morning plan was to let it play out to these levels. So forced a trade there, took an L. It was a smaller L, so no big deal. And then I ended up taking a trade later, 2 trades later in the day. When ES sold off and finally got this level tag and then got back up above this level, I was watching NQ because it was showing relative strength compared to the rest of the indexes. ES, RTYY, they were all making new lows, and NQ had started to kind of flip this trend on the 5 minute chart where we made a low here, we started out, we made a high, made a higher low, made a higher high, made a higher low, and came here, started to make a higher high. I actually took my first entry on NQ, a little bit of an early entry here as well, on a break here, and then I ended up getting stopped out here, which is a a little bit of a bummer. But then when ES finally traded the lower level, it was looking like it was going to hold. NQ was giving us this pattern here where we got the spike up, and I entered NQ, MNQ again right here. And I held it all the way up to, I think we had a level here. So I took a trim here, and then I held the rest up to the opening print. I took a trim, and then we had a level here, and I fully exited my NQ position here. This is my best winner of the day. This was like a $700 winner. I had added to it on the way up as well. So that was the super nice trade. I then left my house. I took my kids to the park. My kid smacked his face off the stairs at the park. Nose swollen, black eye, like, oh, it was a mess, dude. But anyway, took my kid to the park, got back from the park, and I saw on ES, we'll go back to ES because that's what I traded. I saw on ES that we, had gotten the push back up to the highs of the day, and then we got this pullback. And basically the trade thesis that I then used from there on out, I mentioned the book Best Loser Wins earlier. In that book, Tom Hugard talks about how the probability of range days closing at their higher or low is higher. I forget exactly what the percentage is, but basically it's probable that a range day is going to close at its higher or lows, right? So I would consider this a classic range day. We got to push back down and then kind of like the V pattern, buying all the way back up towards the highs. Classic range day, sell off, buy up, right? So we've created our range for the day. So we got this pullback. We had this little area of interest on the 5-minute chart here. So when we started to set and hold, I took longs on ES here. I got out of half the position at the opening print, and I got out full of the position on this push up here. So I had 3 winners on the day, 2 losers on the day. We had this nice win on the move down, which should have been a nice win on the move all the way down here. Couple losses through this chop here, and then a winner on NQ's move up here and ES's move up here. So all in all, it was a good day, but you can see how I used multiple time frames to kind of confirm my bias that shorts were with trend, even though that the weekly and the daily charts maybe weren't necessarily in downtrends. They still gave us clues that the lower time frames could trend lower. So hopefully you found some value in this, a little bit longer than I expected it to be. But if you like this type of video, if you learned something, leave a comment, and I'll talk to you guys soon.